Yes, we are live and we can see that it's AMC up 17.46%. You're looking at that now. This is the 1 minute live session, and AMC has run up a gain of 17.32%. Momentum is waning at the moment. MACD is below signal line because the stock is currently slightly below its 10-day moving average. This is what's going on right now. AMC has run up a gain of 17.67%. It's extended further again. At some point, it was higher than where it is right now. It reached 58.75. This is what's going on right now. AMC extending, the squeeze is on. Let's see what they're saying out there. This is my monthly full. It says, let's see, it was uploaded a few minutes ago. It says AMC struggled to stay afloat in the depths of COVID-19. Okay, so we know all of that. What is it going to say here? Insatiable dilution. The pandemic forced AMC to close most of its venues to survive. The theater chain had to turn to capital markets to fundraise and dilute its way through the pain. It just did that. The company now has over 500 million shares outstanding versus about 100 million just 12 months ago. Even with all of this dilution on fundraising, total long-term debt stands at a hefty $5.4 billion and has barely moved lower with equity raises. Additionally, its debt insurance last July came with a sky-high interest of 10.5%, depicting the severe risk creditors see in AMC's business longevity. Why don't equity investors see the same thing? Despite all of this, its enterprise value sits at $29.5 billion, meaning it trades for over 12 times sales. Double-digit multiples are generally reserved for high growth, high margin companies. AMC is not one of them. So, well, these market participants are they are the ones who have to they're the ones who have assigned this value. So this author is trying to give the impression that AMC doesn't deserve all of this value, but if investors put their money in any particular stock, that's how it is. The stock will assume all of those things. It will assume all of those multiples regardless of who or the sort of companies it's reserved for. So it's almost as if this author is trying to say that the amount of the investment people have made in AMC shouldn't be like that. It shouldn't go to AMC, that sort of thing. People have decided that they are going to buy AMC. They're pursuing AMC because the money is there, because the short sellers are shorting the stock and they are locking money into the stock, and then people are going there to squeeze them out to squeeze out that money they have shorted. So it's high time more and more authors and analysts begin to inculcate all of these into some of these stocks. So the fact that we're seeing this continued shorting of AMC is a bullish signal. So it's it attracts people. I'm just repeating myself. So let's just move on. The company remains deeply mired in a cash burn mode, and even in normal times it could not consistently post positive net income. The combination of an exploding share count, a considerable debt load, and still a very long road to recovery is concerning, to say the least. Okay, so he's saying here AMC comes with a plethora of issues making the investment quite unattractive. I think investors of all strategies should steer clear of this name and seek out profits elsewhere. AMC still has a long road to recovery, and that road does not seem certain of the creative. Okay, so this is just an opinion of, obviously, well, to be honest, yes, there are issues AMC definitely has, but people have decided that they will continue to buy the stock. That's unfortunately how it is. You're not going to you can't argue against that. Well, indeed you can argue against that, but you have to. This is what's going on. They have decided that given all of those things, they will still buy AMC. you know. While that is loading, we go ahead and see what's going on. It's up 17, still sustained that 17.5% extension. So let's go ahead and see what's going on here. AMC don't get stock turning out the lights. Okay, the summary, according to obviously we are seeking alpha. The summary of this is that the meme stock phenomenon has been fascinating to watch. AMC has been a poster child of the Wall Street bets crowd. While the share price has defied fundamentals, this never lasts forever. With an enterprise value that exceeds AMC's best of times, poor fundamentals, and a constant threat of dilution, it's not time to be greedy. Okay, one of the major news stories of 2021 has been the phenomenon of the meme stock trade. Okay, shares of AMC have sought from the short squeezes that have occurred in recent months. Over the past year, the stock has moved an incredible 600% and as high as 900% at highs of more than $770 per share. Okay. It's human nature for rapid upward stock price movements to create a frenzy of excitement. Investors have continued to pile into shares, and these elevated prices. At these elevated prices, the overall enterprise value of AMC has climbed as well. In its history as a public company, AMC has never broached a $10 billion enterprise value until the meme stock craze. Today, that enterprise value stands at okay. They put these guys put it at 26, and the folks at Motley Fool put it at 29 billion. Okay, the fundamentals don't support the price. Okay, it's possible that a reinvention of AMC's business justifies the stock's valuation. While that would be quite a story, the numbers don't point to this as a reality. Okay, AMC's virtually on life support. The company was forced to halt operations during COVID-19, and it's bleeding money to the tune of 1.3 billion in FCF over the past 12 months. To survive, AMC has been forced to dilute shares by offering shares to raise funds significantly. The number of diluted shares outstanding has virtually multiplied over the past year, and the management is still asking for more shares. But what about AMC as a reopening play? Retail investors potentially fail to realize that the impact of dilution on stock return. They don't realize that, okay, according to this author. When a company raises capital by issuing shares, it is the same as a slice into smaller pieces. Each investor's share is worth less because there are more slices in the pie. With the aggressive pace that AMC is issuing shares, the dilution is significant, and it is crippling shareholders' chances of meaningful returns in the event of a rebound in the business. Analysts are projecting AMC's business to rebound as consumers return to movie theaters over the years. Revenues are projected to hit as high as 5.19 billion in 2023. This doesn't guarantee a huge ending for investors, though. Okay, so AMC was struggling to profit before the pandemic, and the additional dilution and multi-year rebound in theater traffic are only going to make it harder. Media continues to gain momentum with direct-to-consumer streaming channels, a secular trend that AMC was already dealing with. Okay, wrapping up, AMC is trading on valuations that its business fundamentals cannot support. Like a game of musical chairs, the music eventually stops. When the momentum that carried AMC higher eventually turns, there will be no fundamental strength to support shares from crashing back to reality. While I don't appreciate the meme stock, while he doesn't participate in meme stocks, he advised all investors to use caution. You don't want to be you don't want to be the one putting out the lights when the show is over. Okay, so let's return and see what's going on here with AMC. We are looking at a retracement now, down to 15.77% at the moment. So let's quickly have a look at the options and see what's going on there. Look at the options chart. This will give us the June 18 calls. Okay, so we're seeing a decline here indeed, because the decay has been going on. but we're also seeing an extension as well. You can see that we're seeing an extension. Even as at today, we are seeing some extension. Okay, so let's go ahead and see what it is like. We look at it in using a proper table and see what's going on. Okay, this is AMC. Let's look at the options table. Might be able to see some information there. So while this is coming up, okay, we'll just go ahead and AMC. Okay, we can go ahead and select options. So we have to point out that we have a position in AMC as well, so it's good that you know that. So this is what's going on right now. Some of these open interests on the call side of things will help us understand what's going on. Okay, so this is some of the things that marketing shots, or rather some of these market participants are looking at, and then they will go ahead and decide to move in and start shorting, rather start squeezing. We can see the sort of figures we're looking at here. Okay, all of these, you can see this 100,932. We're talking about 10 million shares that may be forced to be market makers may end up buying. So when market participants look at this sort of figures, they see, okay, yes, if we go ahead and buy, we may force the hands of the market makers. You can see that here. Over here we can see 59. It hasn't reached 59 yet. You can see the $59 strike and the $60 strike. This is the June 18. They have values of it, a total value of about 45,000 and some fraction. Okay, so we are talking about 45,000. That will be 4.5 million shares if they have to be exercised, but this is only one part of it. So what this tells us is that, amongst other things, there's a good chance that people who sold short have come here and they have sold some of these 59 and 60 strikes. That may not only be the case, it may also be that people are buying the stock as well. They may not just be the options, they may not be that they're selling it, they may also be buying it, and they are expecting the stock to rise to that sort of level. Okay, let's go ahead and look at the next that will be the June 25. Let's look at the June 25 and we'll see what things are like. Okay, but it's not only about the next sort of levels, but they're important though, but indeed all these other ones in the money as well, all of them are very much relevant, because they can always sell their they can always sell any of these to hedge their short positions. So, but I think another means of looking at this is also the through the Greeks. It will give us another set of pictures as well. So let's refresh and see what we are dealing with right now. I think we have an extension of 18 point. Okay, we have extended again further 18% now. You can see that, see what's going on there. You can see that. So let's go ahead and see what the Greeks are saying here. Let's go down to that. Okay, these sort of figures, 59.60. Okay, we have a delta of 0.56 and a gamma of 0.018. So if I believe this is gamma, this is a rate, so I would normally say that if the stock increases by $1, then this will increase by 0.56%, I believe. If it runs up a complete one, if it runs up a whole dollar increase, then this will be the rate of increase. Okay, this will increase by this sort of rate, 0.56%, I believe. I don't want to conclude that it is it may well be $0.56, but I think it's a 0.56 percent. Sorry, okay, well, I think it's $0.56. That's what's going to add to that. But okay, so these are the sort of gamma delta we are looking at here. So sometimes they will give you a fair idea of how things are going, because if they are increasing, then it will suggest to the market makers that they have to act, and then they will in turn also go and begin to hedge some of these stocks against impending extensions. So yes, let's move down to the June 25 and see what's going on down there. June 25, you can see we even have higher deltas, but a lower gamma. We have a higher delta here, 0.609. Obviously these ones have some more life left in them as against the 18. The 18 has the June 18 contracts have 4 days, whereas the June 25 have 11 days. So you can see this is even at that, we even have higher gammas at 56 and some fraction, and indeed they may have been forcing market makers to react even further up. So these are some of the things that's going on right now, and market makers are constantly watching. Short sellers are constantly squeezing, constantly hedging, and indeed also the market makers, they are watching, observing, and equally hedging as well. And we are also equally watching and seeing all of these figures, and they help us react and see if we are going to put in money or not. So let's return and see what's going on. Okay, AMC now up 19.8% and extending. Going ahead now. We have passed that $60 mark. Sorry, with the $59 mark, we have passed it. Yes, let's refresh this. Let's refresh and see what's going on. We have a 20.2%. We have 20.31% here. You can see that. The squeeze is on. See that? Squeeze is on. Let's keep you here at 20 on the charts and see, so that you can see what's going on while we look at a few things. Okay, so another thing we also have to look at is the market volatility, implied volatility. Let's use the Greeks again. I believe we can see that from the Greeks. Implied volatility. Yes, implied volatility, you can see that. So this, let's go down. You can see that. Let's go down. So implied volatility at 326%, 326% for that 60. It's higher here. It's increasing as we go down. You can see that. It's according to, so the implied, what that means is that it's an options based measure of how much traders expect the stock to gyrate in the near term. Okay, so that's what implied volatility is all about. So we can see that. So we have that for the $60 at I said 326%. So let's see what's going on. So we have a 21%, 21.8, 21 point. It's extending. I can't even keep up. So we have to refresh this again. Things have changed. The stock has exceeded $60 now. Let's refresh all quotes. Okay, so yes, so what it's actually saying is that what is causing some of these squeeze is that market makers, they call, as the stock keeps on rising, they keep on some of them begin to sell some of, like, okay, some of this sort of like as it is at $60 and some fraction. Let's look at where it is now. It's at, okay, it has retraced to $59.75 or something like that. So at these sort of figures, they begin to sell them. They sell them. But once they sell them, we see the figures. We see them when they sell some of these options. We see them, and then if it begins to creep up, they are forced to buy the stock the same amount. So you can see with this sort of implied volatility. Let's see if they sell them, they will be forced to buy them when the stock approaches that sort of level to and hedge to protect themselves, so that's what's going on. That is what's going on right now. So let's return and see what's going on. 22.15%, is that the case? Are we looking at 20? Okay, we have a 20 point, so we haven't reached that 22 is no longer the case. Obviously, this is not as it's a static site. This is much more of a live feed. So we're looking at an extension of 20.49% and extending, but currently it is just slightly retracing. It's cooling off, getting support from the 10-day moving average. This is live, AMC live. Okay, so let's return here and see what's going on, So yes, all the way out here, I think they will be they'll be forced to continue to increase their positions, sell some of them. You can see we have 65 has a handy volume, but we also have this 25. So this is just it just gives us a fair idea of where this will stop. So I don't think the stock will probably go beyond $61. That's our prediction. I don't think it's going to go beyond the $61. So for now, let's move down and see what's going on based on this June 25 and see if we have any figures that will support a further extension. Okay, yes, I don't think we're going to go beyond that. That's June 25 is not suggesting anything either. Then the next one is July 2nd. Let's go down and see what July 2nd is saying for the 61. Not really. We don't have any sort of data that is supporting that. So I think, yes, we'll probably rest around there. We are already in the morning for the 59 at the moment. Let's find out. Yes, we are already in the money for the 59 strike. So there's a good chance this will not go beyond $61. That's our prediction based on the data. It could be wrong. We could be wrong. They may still go ahead, or may have started to even increase, put their positions there. So for the 61 strike, we have an open interest of 1,221. Let's refresh and see if that figure has changed or will change. Okay, let's see return and see what's going on. We have 20.26%, a retracement below the 10-day moving average. So let's see what's going on. It's still at 1,221. So okay, but we are also seeing something like 16,000 at the $70 strike. So this is yes, they have skipped on even up to 73. You can see, yes. So I am probably totally wrong. Even though I did not see that. I mean, I could also be right. Maybe within this 1 or 2 day sessions between today's session and that of tomorrow, the 15th, it may not go beyond 61. But in the long run, towards the middle of the week or towards the end of the week, there's a good chance that it could further extend to 73, because we can see this sort of figures here. $70 strike has 16,586 open interests, and the 73 has even close to double that. So this looks like the sort of things that may have, we can see the volume here. See volume 30,122. So there's a good chance they may have been shorting this one, to hedge. They sell these positions, and then they use the credit to they use the credit, they get the credit. The credit will be their gain should they lose out on what's going on. So but if it begins to creep up again, then they will be forced again to buy. So this is what we are looking at right now. So let's return. We have an extension of 20.07. So we'll continue to update you. So this is live, AMC live. Continue to update you. Stay connected. It's gradually retracing now. Okay, so you've been updated, and we'll continue to also pursuing these updates for you. Okay, so thank you very much.